how did you enter into stablecoins, into crypto? You're from Brazil, so tell us a little bit of your backstory.
The opportunity is there, and it's increasingly more interesting over the last few years.
So I would love to hear your thesis on why local stablecoins will be important in the next 5 to 10 years. Just for people that don't understand how Pix look like, it's basically a QR payment. You go to a store, then a QR pops up. It can be like in the terminal, like where you do the payment, or you can print it. That's one of the reasons I'm super bullish on Brazilian stablecoins. Hello, everybody. Welcome to another episode of Frontera, the podcast where we analyze frontier markets and frontier technologies. Lately, we've been talking a lot about stablecoins, local stablecoins. The stablecoin first Bybit so just happened. And that's where I met Thomaz Teixeira, who is the CEO of BRL1. Thomas, thank you for being here. How's everything, man?
Great, great. Thank you for inviting me here. Very nice to be here, and thank you everybody for watching this.
Amazing. So you were in the stablecoin conference in Mexico City, and you were in a panel that I was in that panel, like I was in the audience, and then I posted a picture of, I will tell my kids that these were the Frontera crew because you were with Aaron Stanley from the Brazil Crypto Report, also with Will from Intel, Dave from Etherfuse. So basically, a lot of friends from Frontera, and I'm really happy that now we're doing this. And I'd love to start hearing a little bit about your story. Could you tell us how did you enter into stablecoins, into crypto? You're from Brazil, so tell us a little bit
Sure.
of your backstory.
Okay, well, I was working in financial markets for a long time, and I had a few friends that were early in crypto, so Bitcoin buds, so on. So didn't get me immediately, should have maybe. But then eventually, when Ethereum's route, that was really something that impressed me. Is okay, this is changing the whole way things can be done in financial markets. And in many ways, it's a continuation of what we're doing, which is innovation and technology in financial markets. So about 2017, 18, I decided, okay, now let's really try and see what's the potential of this technology, of Ethereum, of the virtual machine, and decentralized markets, what it can do. Then in 2018, I was trying to see, well, okay, everything's going to be tokenized, great, but now what? Our daily lives still is in real. Okay, so you still have to pay salaries, wages, market, you know, school, so on in real. So in order to the tokenized world, if it happens, we need to have tokenized money. So in 2019, I run my first issues of Brazilian real stablecoin. This was BRL at a company called N Tokens. And since then, I'm working closely to regulators. Central Bank of Brazil has been very supportive. They have an amazing staff that have huge expertise not only in money and monetary policy and regulation, but also in crypto and technology and how these things can work. So they were very helpful. Securities Commission in Brazil as well. So since then, I was like, okay, let's make it work. And that first stablecoin was discontinued a year ago, but now it's a much more improved scenario where we have a new way to issue that is a syndicated. We can talk more, but that's how I got here. I mean, uh, financial markets, that's the way to go. More information, more security, more global, more transparency, and innovation. And this has been like 20 years like that, so I won't take too long for that, but it's a simple continuation in many ways.
Yeah, I think that something that, like, a really simple way of understanding stablecoins is just the next iteration of global money, right? On blockchain rails, and it makes a lot of sense. I remember when I was working at Bitso, we had a huge debate on how to name stablecoins because the user basically didn't understand the term stablecoin, and we decided that the best way to, like, the best term were just digital dollars. like you can go deep and understand what's a blockchain and all of that, but basically they are like US denominated stablecoins are digital dollars, and that's the easiest way to understand it. So you've been in financial markets for several years. Also, you've been a founder. I would love to understand um, how did you decided that solving like a Brazilian real stablecoin was the thing you wanted to work on? What were any moments that you identified like this is a huge opportunity? Let's go all in building BRL1.
The opportunity is there, and it's increasingly more interesting over the last few years. Because again, as I said, it could start like, okay, we have a way, we must have a way to tokenize, to settle and clear tokenized things, assets, investments, whatever. So this is the first kind of, okay, there's a real problem here because you really need to make sure that people can use real to buy digital assets, okay? And by assets is very broad. It can be crypto, can be investments, can be tokenized real world assets, and so on. But this is a real pain. You should be able to do that. And if you're doing that with SPay or with PIX, it's very nice, but it clears a limbo. It creates a limbo where, okay, you have some balance that is worth real that you're supposed to use in the digital medium, but it's not yet a digital medium in itself. So this is something that is an imperfect solution. Just as exchanges, or if you buy something with credit card, crypto, or you have balance in exchanges, it's very nice, but it's still not the full experience of having crypto power. So in this sense, the opportunity is there, and we're far from solving that. There's still much demand. Lately, we've been much more acute case because we've seen a huge success and a huge application of USD stablecoins, right? So now, I don't know, Tether, USDC, USDG, actually have many USD stablecoins that have tens, hundreds of billions of dollars in total value locked. And this is becoming not only clear that yes, you need digital money to be in the digital world, but also it gets clear that it's something that's starting to interact with the deep root of economical reality of those of countries that are not US dollar countries. Because of course you can say, oh, right, you have US is a big economy, so naturally they have a big exposure, so on. Yeah, that's clear, but we're talking about USD being used by the global south. We're talking about USD stablecoins heavily used in Mexico, in Brazil, in South Africa, India. And in this case, we see that even more than just sorting out how to buy digital assets. It's like, okay, there's real utility there. Maybe those guys, maybe it's a rhetorical question. So, yes, so of course, those guys, they would be very happy if they also have an opportunity to have their digital movement in pesos, in reais, in whatever their local currency is.
I think then again, it's just the natural evolution of things. Along the history of humanity, whenever there's a platform change, obviously it starts with a huge adoption, and then afterwards, or with some specific use cases that are relevant for adoption, and then it expands. Like I can think of Florence in the Enlightenment. Basically, they used like banking to do their huge empire of gold, and then because of that their asset was the best one to use, and they use it all around the world. Like this comes to the analysis of current stablecoins. They all started with US denominated stablecoins because basically it's a global reserve currency for now. But if we want to make this technology expand all over the world, I think that local stable coins are fundamental for that explosion. And also, that's why I'd love to hear your opinion on this. So, a lot of people do not understand why local denominated stable coins are so important. And they think in my opinion, what I say is that they see the dollar, the use case of the dollar as something really important, that is having a reserve currency, but it's not the only use case. Money has different use cases, and that's where I think that it makes a lot of sense to have local stablecoins. So I would like to hear your take. You're building BRL1. It's a Brazilian stablecoin, like a Brazilian real stablecoin, back one to one. You are one of the most important players in the local stablecoin market. So I would love to hear your thesis on why local stablecoins will be important in the next 5 to 10 years.
Okay, well, one important part of it is that, especially after Ethereum, but as programmability goes, the digital part is very important because it's very flexible. Okay, so we can, in the same platform, the same protocol, represent several different use cases and several different formats and behaviors on stablecoins, but also on assets in general. So we can have niched, and we can discuss about that later. But you can have broader use for the same format of money. For instance, for a big part of the end users, okay, it is important because if and and the explosive use of USD stablecoins show that, no doubt. If it is the case that users are empowered by the experience of having the digital form of money, okay, it is very good that users can have that in their local currency. This not only because if you want to have the digital experience and all or most of your day-to-day events are paid for or liquidated and settled in local currency, why not have this experience right away in your local currency? Even if it is okay, later on, I will swap for dollars because I'm doing export, import, whatever. But even the exporter, they have to pay taxes, they have to pay wages, they have to pay insurance, they have to pay freight, all that in local currency. So even for them who are heavily dependent on USD because they're in the international market, user case for the use case is very clear. It's very good if they can do that because they have the both experience, the digital and the local currency. Now for traders, it's a bit different. For traders, for instance, when you're a market maker or a trader or arbitrage or anything that's moving markets, okay, and you're trading for a profit. Let's say there's a guy who's trading for a profit, not trading just because they want to export, import, or pay something. For this trader, if they are looking at prices that are denominated in local currency, the best way they can move money to enjoy price opportunity is via a stable coin in the same denomination. So if you're making an arbitrage, you see two different prices of Bitcoin and BRL, and you want to enjoy the opportunity or take the best price, the best way for you to do that is move through Brazilian real stable coins, because USD stable coins will give you some exposure to currency fluctuation and price slippage, so it's not good. So for them, it's necessary. It's something that we see. BR1 is, I don't know, some 3-4 months out, and it's already top 6, top 7 most traded crypto in Brazil. Crypto, all crypto. So this is clear the case that yes, those guys they and all users of BR1 in this case were already used to having very good knowledge of how to use Tether, USDC, and so on, and they still chose to and started using BR1. So this is a clear case that for them is very important.
Yeah, I think that one of the most exciting and interesting things about the different approach of stablecoins and CBDCs, the way that I like to think about it is on-chain fiat, because some people try to compare CBDCs and stablecoins, and the way that I put it is they're basically on the same category. The thing is, how do you do the different deployment? And with one of the most important parts of that same category is the programmability, because if you have the ability to program fiat or program money through stablecoins, you can deploy different use cases, as you said, like trading, commerce, international settlements, and that's where it makes a lot of sense to have fiat like local stablecoins and USD denominated stablecoins. Also, I would love to chat about how BRL1 is composed, because BRL1 is a consortium. You have Foxbit, Mercado Bitcoin, Bitso. So basically, the top players in Brazil, the top crypto players in Brazil, endorsing BRL1 and endorsing the different activities that you are deploying. Walk us through why it's so important for BRL1 to have the endorsement and the consortium of different companies, because this is a different approach that it's not followed by neither by Circle nor Tether. They have the product that is the stablecoin, and you have more like an approach of having several key players through the asset. Could you walk us through that, please?
Yeah, sure. This is indeed very important, and the key reason I joined, and I really appreciate the participation of Bitso, Mercado Bitcoin, Foxbit, and KineVest. Not only the companies, because they're very interesting mix of cultures of very successful companies, but also the people that is amazing. It's an amazing team. I'm very thankful for the team that dedicates its dozens of people that dedicate themselves to making BRL1 success. So first, it's key to the success is the people that are involved, and that starts with having a joint venture or a joint team, joint group of people with the same goal. Okay, uh, so starting from that, one important thing talking about markets is the network effect, because when you see that okay, we are available for Bitso customers. Bitso customers, they have a different profile, a different activity, different reactions to market than Mercado Bitcoin customers, which by their time have a different profile of Foxbit customers. And all of them can benefit KineVest market making activities, which helps kind of the wheels working more in tune and with less friction. So first, this network effect is amazing. Is something that would not be possible to have such a successful stablecoin in Brazil if not by this network effect. So this is to begin with. Okay. Now, a second very important part is the resilience and the governance that they get from that, because and mind you that in Brazil, Mercado Bitcoin, Bitso, and Foxbit, they overlap, so they are competitors. They are fierce competitors in a way that they're very competitive in what they do, and they are really looking for doing the best for their customers. But in this sense, having competitors trying to work together brings us a very good resilience, because the governance has to be very strong. Well, I have to be absolute transparent on pretty much everything we do, every decision we make, every decision we postpone, every information we try to gather to make more services or better service for our customers. This has to be totally accountable for. So we have to be transparent, we have to be clear, we have to be objective. Also, keep in mind that not only they are the original founders of so partners of the company, but also they offer DRL for their customers. So we have different commercial agreements with them. So I have commercial agreement with all of them. So those agreement has to be very objective, very clearly stated why, how, and how our decisions made about it. So it's a very good, strong governance to begin with. Okay, so this is something that other people in the market, when they approach us and say, okay, let's try to expand this, they immediately see, oh, all right, so okay, so you have to be really careful of information of each company, but also really transparent with everyone, everything that's on BR1. And for a stablecoin, it's great because the more transparent you are, the most reliable you are, the more people trust you, and the more they use it. So this is something that has a very important side effect. Another important side effect is that from day zero, uh, we had to learn how to share revenue. We had to learn how to share market, share knowledge, and share opportunity. And in this case, it's very good because in our business model, which is okay, people who are coming to BR1 to expand this network, to join us into this growing network, they will be able to also receive this opportunity of shared revenue.
Also, I think that one important part is that you can be absolutely upfront and clear on how you do, like, this consortium gets benefited and how incentives are distributed, or you can go a little bit more, I don't know, like in the back end, do those deals. It's not that they are secret, but they don't might not be public. Like, everyone was shocked when USDC, well, when Circle went public, and we all realized how much money Circle was paying for Coinbase. Well, and we were like surprised, and everyone in the crypto world was so bearish on the IPO, and we were so wrong. Now everybody loves stablecoins. So in your approach, you're being completely like upfront on, okay, this is a consortium. If you come to the consortium, you can have like a revenue share because of distribution. So it makes a lot of sense. It's just a different approach. I don't say that Circle One is wrong. It's just a different
No,
approach.
exactly, exactly. I'm not saying that. Well, actually, it would be kind of naive saying they were wrong because they're clearly successfully, very successful in their business,
Yeah,
and also in their offering, and also as a good product for for the customers. So I'm not saying they're wrong. It's just that for us, it's a huge benefit. We can increase and grow our network with more partners. So this is
yeah.
something that more partners immediately look at us and say, okay, so you're a company that work well with partners. So this is something right away.
Yeah, and I mean, in the history of payments, the most successful companies follow this approach of having kind of a consortium or like these network effects. You just need to take a look at Visa and how the founder D Hawk started with like having a lot of banks across the United States, and he enabled the payment processing, right? So it makes a lot of sense to do that in the common, like in the new era where we are moving from like a physical plastic card to the blockchain, right? And I would love to chat about that evolution because we follow Brazil really deep in Frontera. Like every week we chat about it. I think that it's one of the most advanced frontier markets regarding crypto because of the regulation, the appetite, the competition. I don't know, you can see, and you have several exchanges. I mean, like more than 10 different crypto projects. In Mexico, we have one that is Bitso. And obviously, big competitors like Binance, Bitget, Bybit, and many more, but those are global, right? And regarding stable coins, there are several projects, and also there is DREX, that is CBDC. I would like to understand, how do you see like the complement, or how does BRL1 and DREX live in the same ecosystem and they complement each other, or are they competitors? How do you see this overlap?
Okay, taking a step back to a broader picture, Brazil, way back because of inflation and so on, has a very efficient financial system. It's digital, it's very fast, very efficient for a long time. Okay, so we have PIX, which is a very successful, wouldn't say experiment, reality that brought financial access to millions of Brazilians and are in day-to-day activity of pretty much everyone in Brazil, from big corporations to people selling soda in the street. Everyone is using Pix, and it's a fantastic use case. Okay. Now, and DREX, it's an attempt of central banks saying, okay, if we are doing, if we are that company, that country that will go towards tokenization, great, but let's bring more network effect. Let's bring more of systems and more assets and more processes into a network that can process that in the ways of blockchain. Okay, so this is very interesting because when you well you have very good images of broader history of things. So one good way is that okay, people ask, okay, but this is digital for a long time. It's been years I use my bank with my cell phone, so of course it's digital, right? Uh, yes and no, because in a way, yes, of course it's digital, but it's sometimes it's like, okay, let's assume I can send money by email, okay, but I can only do that by sending PDFs of checks. So nice, it's digital, right? I write a check, I sign it, I send you a PDF, you open it, somehow it's worth, right? Because I can send the same
Yeah, yeah,
and
yeah.
but I don't know. The image is that so it's not only that it's digital, it's that it's programmable. And this is something that's a natural evolution of PIX. Because you see PIX as fantastic as it is single asset, so it only moves real, okay? And it's one way, is unidirectional. So I can only transfer real. I don't get anything back. I get some messaging that I did send instructions to my bank, that send instructions to the PIX system, so on. But I get nothing from you. So if I send you a PIX, that's a uni asset, unidirectional transaction. Now, when you compare to what you can do with stablecoins, you can do it multi-asset, you can do it DVP, you can do it multi-party, so we can all interact with the same single smart contract. We can do in a way that I'm sending you money, but you're sending me something. An asset usually we see is DVP, but more than that, and that's kind of where central bank is hitting, I think, with in a very cautious way, or in a very, even though they are pro innovation, in a very cautious way. It's like, okay, how about we can do that with cars, with loans, with insurance? How about we can bring insurance and financial products to the same speed and the same velocity and the same efficiency they have fixed? And for that, you need programmable money.
One thing that I wanna make a comment is that Pix, in my personal experience, the first time I saw it was around of 2022, maybe. I went to Sao Paulo and I went to a like a flea market and bought a T-shirt. And Pix was the adoption is amazing. And for people that don't know it, personally, and talking from outside of Brazil, one of the most important parts of Pix is the user experience. It's the basically it's perfect for the market. It's just like a QR
It
code. You scan it, and off you go, right?
yeah.
So when you think about Pix, I see it on three layers: the network, the asset, and the experience. The network is Pix. It's like
Yeah.
that's the nodes for the asset is BRL, and the experience is really good. And what you're saying, the way that I think it is, okay, now now that we have the experience, let's extrapolate it to more networks that are blockchains and more assets that is
Exactly.
BRL1 and other
Yes.
programmable
Yeah.
tokens.
Yeah. Even simple things such as I don't know, movie tickets or
Yeah, yeah,
show tickets. And but that's a trivial case. Say, okay, you don't need to do a real whole new exchange just because you want football games in a better experience. Okay, maybe not, but football games is something very important. But maybe
yeah, yeah.
not change the whole world because of that again. But surely, when you talk about insurance, when you talk about assets, when you talk about cross border, and you can bring that kind of experience, it's something that and maybe you as a visitor would be something. Oh, okay, it's cool, nice. But for Brazilians who live here, it's really something that changed, especially for those who had not an easy access to the financial system. Because of course, maybe you say, oh, all right, big banks, they had some good experience exchanging money, okay? it improved the PIX, but it was good. Now, people with less access, those are the most beneficial, the most single case that, yeah, they really changed their lives. So,
Yeah, and something that was really surprising for me is that, for example, there are people in Latin America. Is really common that people like in the stop signs, they are doing random shit basically, like they're juggling or they are
yeah,
doing, I don't know, they are performing. And in Mexico, the only way that you can pay them is in cash. But in Brazil, they go like with a QR code right
exactly.
next by the cars, and people. I mean,
It's
that's
very easy. You
that's
take a picture and right, a few seconds later, demands of him. And honestly, it's sad, but for people in cars, it's also a better situation than finding your wallet, getting a bill that
yeah,
nobody cares bills anymore, and
yeah.
then open the window. So they took a picture. That's it. That's I mean, it's,
And the thing is that the adoption is from people juggling in the street to like BlackRock, So it's
yeah.
like it's the whole span, and I think that that's the exciting thing of stable coins. That if you've already, as a country, as Brazil, if you've already cracked the experience, now it's an engineering problem. And I think that humans are better at solving engineering problems than design problems. So that's really exciting. And I'd like to start closing the episode thinking about, we're talking about huge adoption of pigs, doing the like doubling down on the network and the asset element of payments in Brazil. And right now, Brazilian stablecoins are around at a market cap of $23 million. Personally, I think that local stablecoins will never get to huge market caps because the use case is different. It's more about flows than like holdings, but we could explore that in the future. And I would like to know, how do you see like this market cap and these volumes evolving 10 and 100x? What does it need to happen for BRL1 to have this level of adoption as Pix has achieved in the past years?
Well, as Pix has is something that's very challenging, but maybe it's a good benchmark in terms that, or Pix and even USD stablecoins, right? So if you talk about, okay, let's do 1% of Pix does. Let's be 1% of USD stablecoins. This is already 200x we're talking about. So we're not talking about discussing about 10x, 50x. The opportunity is really 200x. It's something that it's really way, way, way further than it got now. Okay. Now it's very hard to say, okay, are we talking about the peaks, which is an experience that is more transactional? Okay, then for that you don't have to keep, let's say, issuance or a market value so big just to transact. Okay, whereas when you're talking about having the good part of, if not reserves, but capital that's in orbit of Brazil, waiting for opportunities, or just waiting between users, and in the meantime, having yield and sharing the revenue with the whole ecosystem, and helping Brazilian economy by financing treasuries in Brazil. But that's a different case. That's more of a volume of issuance. And it's not yet clear where is going to be the balance. Even if you see Tether and Circle, the amount of the relation between the amount issued or in reserves and the circulation is very different. It's very different. So when sometimes we see, okay, it's trading like 20 times its total issuance, or sometimes it's trading 5 times its total issuance a day or a month. So this is something that we're still discovering where the sweet spot is. But I would say that in general, we're talking about 200x. It's okay, maybe if we're not talking about, Brazilian real is what, I don't know, 2% of global trade. is 3% of reserves, whatever. And stable dollar is like 60% of trade, 80% of reserves, fine. But they're talking about 99.99% of the market's USD stablecoin. So if you're talking about MXNP or BRL1 getting to 0.5% of the global USD market, this is 200x. So if you're talking about stable coins helping or building 1% of transactions in PIX, we're talking about 1,000 times more transactions than we see today. And I'm talking about, okay, we're doing just 1% of PIX transactions are supported, connected to stable coins. We have to do 1,000 times more. So this is something that it's so untapped where we are that is really and also don't get me wrong, it's not a case of people did it wrong before, because Pix is relatively new. Okay, 6 years ago there was no Pix,
Yeah, yeah, yeah.
so it's ranked like really like this. And I'll tell you what, in the first, well, not in the first month, but in the first week or so, there were people in Brazil that were in the market and the business and said, nah, it's not gonna happen. This, we did see this, but no, it doesn't make sense. We're happy. Who needs better than half an hour, all right? If I send money to someone, half an hour there, it's okay. I mean, we're happy. Nobody asked for pics. Nobody asked for pics, so we're all happy with that. This is already kind of the fastest we had in the world. So, and then poof. So it's not something that, okay, it's sitting there. It's obvious for a long time. We didn't do it. No, it's really fast to catch up. It's really fast.
Yeah, I'm looking for some data. I'm gonna share my screen because it's really impressive the way that Pix has grown. And actually, I'm just testing this new AI mode in Google. This is from Bridge, the investment fund. You can clearly see how launched in Q1 2019, basically no adoption, and then for 2 years, this seems like a startup,
Yeah,
and then
exactly.
vertical
You
growth.
see, well, yeah. By this, you can see that in 3 years, in 2 years and something, it was already bigger than debit and credit card, which were there
Yeah,
for decades, and worked very well. Worked very well. I mean, if you in 2019 you came to visit São Paulo, okay, not the jugglers and not as accessible, but your experience as tourists, they'll say, oh yeah, I got my Visa card. I could
yeah.
go anywhere in São Paulo and buy things. Okay, nice. So it was something that was working, and see, look at that. So stable coins didn't catch up, but nothing could catch up this
Yeah,
fast. Maybe AI, maybe AI. If you put
yeah.
AI here, it'll be something comparable. But that's, I mean,
And so the most exciting thing for me is that this is market expanding because the other trend lines do not fall in a same like in the same dimension that Pix is growing. So it's
yeah, this,
literally people making more transactions. That means
yeah,
adoption.
exactly, exactly. It's not okay. People stopped using credit cards. No, they didn't stop using credit cards. They didn't stop using debit
Exactly.
cards. Okay, maybe last year you saw a bit like this, but it's clearly not the case. It's something that just because it's more accessible, it's faster, it's easier to use and experience. People are doing more business. People are maybe a bit. What was not there is that it's denting, or maybe it's curving from the informal economy. So
Yeah,
people that you maybe you see transactions that are not in the financial system kind of probably diminished in this time, which is great. Which is great precisely because a big good part of that are for those who need more.
definitely. And just for people that don't understand how Pix look like, it's basically a QR payment. You can see it right here. So you go to a store, then a QR pops up. It can be like in the terminal, like where you do the payment, or you can print it and just have it there, and then off you go. So that's why. that's one of the reasons I'm super bullish on Brazilian stablecoins, because of this pyramid. If you first crack the experience, then the network, and then the asset, it's a lot better than trying to crack them at the same time. And with the experience Brazil has, I'm super bullish on seeing those experiments. I'm super interested on keep exploring what you're doing, Thomas. Thank you for being at Frontera. Where can
Thank
people
you.
find you?
Well, BRL1.io, of course, as a reference, but most importantly, people can find BRL1 at Bitso, at Mercado Bitcoin, at Foxbit, some DeFi as well. So this is really go use it. Don't even need to find us. Just like use it. And this is something that, and if it doesn't work so well for you now, let us know and we can make it better.
Amazing. Perfect. Well, Thomas, thank you a lot. Then again, you can find us. Go read our newsletter. We'll put it in the show notes. We're writing a great essay. We just published a great essay about BRL1 and this pyramid. So thank you for coming to
Yeah,
Frontera, and see
send
you
me.
next time.
I want to read it. I'll be the first
Absolutely.
to read it. Yes, yeah, absolutely.
I'll
Great.
send it over. Thank you.
Okay.
Take
Thank
care.
you very much. Yeah, take care. Bye bye.
Bye.